How's it going, everyone? In today's video, we're gonna do our pre-market analysis. And as you all know, I trade the Emini S&P. That's the only pair I'm interested in. And so let's jump right into it. But before we do, uh, I usually like to start out the week, as you already know, looking at this particular article on investing.com, top 5 things to watch in the markets. And I also like to look at the economic calendar for the that's coming up. And I usually have this filtered for just the US dollar and high impact and medium impact news drivers. I do this on forexfactory.com. So as you can see, nothing much happening on Monday. In fact, Monday is completely blank in terms of high and medium impact news drivers. Then we have Tuesday, Wednesday, Thursday, and Friday with the high impact and medium impact news drivers. So Tuesday is going to be an interesting one to watch. Um, Last week, the Fed hiked the interest rate by, I believe, about 20 basis points. Let's see, Fed interest rates, just to be sure that my internet it's been a bit slower than usual today. So my apologies. Um, yeah, it's fine. But yeah, I do believe that it was hiked by about 20 or 25 basis points. Just 1 second. Should be able to check this very quickly. Fed hikes interest rates. Yeah, 25 percentage basis points. Last week, 4 days ago. Yeah, so it will be interesting for me to see um, what the Fed chair says because the hike was due to the fact that they believe that um, even though they're not out of the woods yet, as far as inflation is concerned, things are turning around, things are getting better. But on Friday, the jobs report that came out, um, the economy added 517,000 jobs. Okay, now this is about 3 times what was expected. Okay, so this is going to be it's going to be very interesting for me to see what Jerome Powell says on Tuesday. All right, because this is coming off of the back of him saying, well, things are looking up, so we don't think we need to do a 50 or a 75 percentage basis point hike. We will only do a 25 percentage basis point hike. But then, right after doing that, on Friday, the economy adds 3 times more jobs than usual. So then that actually goes against the narrative of inflation seeming to be under control. Um, so yeah, it'll be interesting for me to see what he says on Tuesday. And obviously the market is going to respond. It's going to respond quite a bit to this. So that's one of the key things I'm going to be looking at to set the stage for the rest of the week. And yeah, in investing.com's top 5 things to watch in the market, that's number one. And then obviously for the week ahead, we've got earnings season as well. Walt Disney, News Corp, Fox, New York Times, PepsiCo, Kellogg. So those are also going to drive, some volatility in the marketplace. Walt Disney and News Corp are releasing their earnings reports on Wednesday and Thursday. New York Times is on Wednesday as well. PepsiCo and Kellogg on Thursday. So Wednesday, Thursday, aside the high impact and medium impact news drivers, the earnings reports from those companies should also drive um, volatility in the marketplace. So just be aware of that. And yeah, that's pretty much what I'm interested in as far as the fundamentals are concerned for the week ahead. Keep an eye on the economic calendar for the week, and let's jump into the charts. Now, before we look at the S&P, let's take a quick look at the dollar index just to see where we're at. You don't need to do your analysis on the dollar index before you analyze the E-mini S&P, but just for me to understand again, just to add some context to um, the fundamentals that we're seeing. It's good to have a look at the dollar index. Okay, so what do we see here? We see on the monthly time frame, dollar has generally been on an upward trajectory. Okay, here we have a fair value gap. This is November, December, January, and then February, right? So beginning of Feb, we open here and we tap this fair value gap, this imbalance, and then we start to rally. Okay, where could we go? I think the dollar could come here. Okay, so this is a fair value gap on the monthly that's yet to be traded to. But if you look closely, this high, the high for December and the high for January, they are relatively equal highs, right? So we could see the dollar push all the way up and take out these relative equal highs on the monthly time frame. If you also look closely, you see a volume imbalance, which is very small right there between this candle's open, sorry, this candle's close and this candle's open. This area right here is a volume imbalance. This area right here, it's a really small volume imbalance. So price could want to gravitate, all the way up there and probably even take out the relative equal highs and tap this fair value gap here. That's a very long term, projection, and it may not even play out that way. But that's just what I'm thinking long term, very long term on the dollar index, right? So that's what I'm seeing on the dollar. Down into the weekly chart on the dollar index, we can see that we've just tapped into, after reacting on the monthly fair value gap, we've tapped into this fair value gap here. So I'll be monitoring this to see what price does. If it shows a willingness to break above this fair value gap, once it does, the next thing in sight would be the volume imbalance we noted on the monthly, which is this volume imbalance right here on the monthly. So if we do break above these this volume imbalance, this is where I'm going to set my sights, and that would be the high. So this is Monday, January, and then this is monthly. This is December and Jan. Thursday, December 1st, and then 2nd Jan, Monday. So typical highs here and the volume imbalance. So that's what I'm thinking the dollar index could do. Now, if I'm thinking I'm bullish on the dollar index, okay, if I'm thinking I'm bullish on dollar, automatically it stands to reason that I would be bearish on the E-mini S&P, right? Not always, but generally speaking, if I'm bullish on dollar, then I'm bearish on foreign currencies. I'm bearish on the stock market. So let's go to the E-mini S&P now and see what it says on the weekly time frame. Now, if you didn't watch the pre-market analysis I did last week, I called these relative equal highs, the buy side liquidity resting above these relative equal highs. That was my drawn liquidity, and we got a very nice delivery in the course of the previous week towards that buy side liquidity pool. The market opened here, traded below into the bullish order block, rallied all the way, and took out those relative equal highs. That was not random, guys. That was algorithmic precision. Okay? That's not random. The market moves from inefficiency to inefficiency. The market moves from buy side to sell side. That's what makes price book. And if that wasn't the case, I wouldn't be able to call the market with this degree of precision, right? So we call this out. If you're doubting, please take a look at the pre-market analysis video on the YouTube channel. I'm not going to open it. It's going to open it, but it's fine. Take a look at the pre-market analysis video on my YouTube channel, where we did mention that our expectation for the previous week was for price to trade above these relative equal highs and possibly go after the volume imbalance here. Now for this week, I'm a bit neutral. I'm a bit flat because technically, yes, I should be looking for lower prices, but at the same time, too, I kind of feel like this volume imbalance is still in play. So I'm not, I don't really have a hardline bias, because the dollar index is suggesting to me higher prices, which would mean that E-mini S&P should be giving me lower prices. But I'm not 100% sure about that because I think this volume imbalance could still be in play. Okay, so that's what I'm thinking. I'm not. I don't really have any leanings towards any strong buy, yeah, the buy side or sell side. So I'm gonna be waiting to see what the market does on Monday and just responding to that in the course of the week. Now, if I drop down to the daily chart, what you will see here is on Friday. This was my POI. I expected price to drop into this and give a reaction. And I did a whole video on that last week as well. You can check that out on my channel. Um, excuse me. You can check that out on my channel to see when I called this volume imbalance and how I treated this on NFP day. Now, on the daily time frame, looking forward into the week ahead, what am I seeing? Well, I see this order block here. See this bullish order block here. Just a block. Okay. So price could drop into this volume into this bullish order block before rallying. Okay, there's a plane going over my house. I don't know if you can hear it. It's probably gonna cause some interference. The sound, I apologize. Should be over now. Yeah, so there's a bullish order block here that I'd be looking to see if we get some kind of reaction on that. Let me just delete this for now. And I'm just gonna delete this as well. We also have a fair value gap here. So this candle's high to this candle's low. That's that's my volume. That's my fair value gap. Okay. Now that's what I see as far as the daily chart is concerned. Um, we do have 1 second. We do have this volume imbalance that I referred to earlier. It's still here. It's still here. Yeah, it's still there. But my major interest is in the fair value gap here. Fair value gap and the order block I mentioned. What I would like to see, I would like to see price from here come down, tap the order block, and then rally all the way towards the volume imbalance. So that's what I'd like to see. So price. But again, like I said, I'm technically bullish on the dollar, which means that I should be expecting this to drop uh, and not rally higher. So I'm gonna literally, when I have a situation like that, um, for me it's not high probability. It could go either way. So I like to just wait and let Monday play out, especially because Monday doesn't have any high or medium impact news drivers. Okay, so I would like to see I'd like to see what Monday's trading does, and also I'd like to see. Let me just 1 second undo that, delete this, and then I'm gonna leave this fair value gap here. Um, drop down to the 15-minute chart. I'm gonna some of this as well, under 15 minutes. Now, this is where we closed Friday. Okay, this is where we closed on Friday. Sorry, this is where we closed on Friday. This is where we open on Sunday, which is today. Okay, so what I am going to do, I'm gonna take a horizontal array and I'm gonna mark the opening price. So that's my opening price on Sunday. Okay, just make it a lighter shade. Yeah, that's gonna be my opening price on Sunday. It's locked. Okay. Now, why am I marking this price? Okay. Now, ideally, if the week is going to be bullish, we want to see price at the start of the week make a low below this opening price on Sunday. Okay. And that low will most likely form between Tuesday and Wednesday. And then start to trade above that low, that weekly opening price low. Okay. So at the start of the week, remember price is fractal. Okay. So in the daily range, we expect the power of three to play out. ICT's power of three, accumulation, manipulation, and distribution. We expect price to push below the opening price, taking out sell stops. That's if we're bullish, taking out sell stops, and then rallying above the opening price. Same thing with the weekly range. If we're bullish, we expect at the opening price on Sunday, price to drop below it on Monday and Tuesday, maximum Wednesday, form the low of the week, and then start to rally above the opening price towards a PD array. Okay, so I'm gonna be watching how we behave on Monday and Tuesday with regards to this opening price. That's what I'm going to do. Now, what I also typically do when the week starts is I have these weekly dividers. I do not use trading views separators, and ICT has told us that multiple times. So I use this, so I'm going to move this all the way. So this is for Monday, that, and then this is Tuesday, that across, and then this is Wednesday, that here, lock that, and then this is Thursday, last one, which is Friday. And that's my weekly dividers and separators. So I'm gonna be watching this like I told you. I drew this on the 15 minutes opening price. Check coordinates 41, 34, 25. Open here is 41, 34, 25. So it's on the mark, right? Cool. So yeah, those are my thoughts for the week ahead. Just gonna be keeping an eye this fair value gap. We could see a reaction to the upside here. Um, if not, probably the bullish order block. But yeah, I'm just going to be keeping an eye on that, and of course, also just keeping an eye on the dollar index as well, just to see if it wants to, if it wants to break above this fair value gap. Remains to be seen. Yeah, hope you found this video insightful. Um, this is not supposed to be here. So it's fine. It should not be here. Should not be here. It's fine. So I hope you found this video insightful. If you did, please comment below if there's something specific in your trading that you're struggling with or that you have questions about. Um, Comment below, and I just might do a video on that just to help you guys out. Um, and if you enjoyed the video, please give it a thumbs up and consider subscribing to my channel. I'm going to be dropping a lot more videos in the future. So yeah, stay tuned for that, and thank you for watching.